Welcome to this explainer. Look, if you've ever been literally pulling your hair out over a lack of profitability in the markets, you are in the exact right place. Today, we're unpacking 9 years of hard-earned trading psychology lessons. We're pulling out some massive core insights inspired by the legendary book Trading in the Zone. We're going to look at how shifting your perspective can completely, permanently fix your profitability. Because at the end of the day, and this is absolutely crucial, it's not the charts that make you money, it is your mindset that defines your trading success.
Okay, let's dive into this. Here's our clear roadmap for today. First, we'll dismantle the perfect strategy myth. Then, we'll shift into the probability paradigm, learn how to master the ultimate risk, figure out why the market owes you nothing, and finally, we'll lock it all in with the 5 truths of trading.
Number 1. The perfect strategy myth. This is the very first major trap beginner traders fall right into, the endless, deeply frustrating search for a strategy that just never loses. And this brilliantly illustrates the massive behavioral difference between a beginner and a pro when a perfectly executed trade inevitably results in a loss. See, a beginner trader fully expects a 100% win rate, so the second they follow all their rules and still take a loss, they instantly assume the strategy is broken, they label the creator a scammer, and boom, they immediately hop to a new strategy. A profitable trader, though, they expect a completely random distribution of wins and losses. They know that losses are just part of the math, so they calmly stick to their edge.
100%. Listen to me on this one. A strategy with a 100% win rate absolutely does not exist anywhere in the world. I mean, think about it logically for a second. If it actually existed, the person who created it would be putting their entire account balance on every single trade setup. They'd be tripling their account daily, and they would literally be the richest person on planet Earth in no time. But they aren't. Anyone telling you their strategy guarantees a win is straight up lying to you.
Number 2, the probability paradigm. We are shifting gears from trying to predict absolute certainties to executing probabilities. This right here is the core operating system of a professional trader.
So what's an edge? An edge is simply a higher probability of one thing happening over another, where your winners mathematically outweigh your losers over a long series of trades. That's it, the whole shebang. Your goal as a trader is not to stare at the screen and predict every single micro move the market is going to make. Not at all. Your goal is to wait patiently, just chilling on the sidelines until your specific edge presents itself.
Think about this for a second. If LeBron James misses a jump shot, is he suddenly a bad basketball player? Of course not. That's crazy, right? It is completely ridiculous to judge a legendary career by one single isolated outcome. Yet as traders, we do this to ourselves all the time. We take one losing trade and immediately tell ourselves, man, I suck at trading, or we decide our strategy is just completely worthless.
You really have to detach your identity from a single outcome and just trust your career stats. When LeBron misses a shot, what does he do? He runs right back down the court and takes the very next open shot with absolute total confidence. Why? Because he knows his career stats. He knows the long-term probabilities are heavily in his favor. Traders have to do the exact same thing. You must execute the next valid setup without even a microsecond of hesitation, based entirely on your back-tested probabilities.
Number 3, mastering the ultimate risk. This is the concept of financial and mental detachment, and honestly, it's the absolute most difficult hurdle for unprofitable traders to overcome.
Now, what's really interesting about this slide is how these relatively small numbers, like $50 to $200, play massive psychological tricks on us, especially with prop firm evaluation fees. See, traders pay this relatively small entry fee and instantly fixate on the massive potential payout, the $10,000 or $20,000. Because their mind is completely focused on the reward, they never actually mentally or financially accept that the initial $50 or $200 is money they could really lose. And what happens when you don't accept that initial risk before entering the market? You fall right into this incredibly dangerous psychological spiral. Step 1, you deny the potential loss of your fee. Step 2, you experience a perfectly normal losing trade. But because you never really accepted the risk, step 3 hits you like a ton of bricks. You spiral into emotional, revenge trading just to make it back. And then, step 4, you completely blow the funded account. All of that just because you didn't mentally accept the loss of the entry fee before you clicked buy.
$135,000. In our source material, the speaker shares a really staggering personal anecdote of losing this massive sum in a single day of trading. I mean, for most people, that is an entire yearly salary, just totally wiped out in a matter of hours. But here's the kicker. Here's why he didn't blow up his career right then and there.
It was his incredibly strong mindset. He had completely detached his identity from that single outcome. His deep trust in the long-term probabilities of his strategy actually prevented this one horrific loss from destroying his overall confidence.
Number 4. The market owes you nothing. We're going to get some tough love here to dismantle this whole idea that the market is some sort of malicious entity out to get you. The market is a non-emotional random entity. It does not reward you, and it does not punish you. I want you to really let that sink in. It is a painful truth, sure, but it is also incredibly liberating. The market is not out to get you. The market doesn't even know you exist. It is literally just a neutral stream of data.
So on one side, we've got the victim mentality. This is when you're blaming the market, blaming some algorithm, or even blaming a politician's tweet for your negative account balance. Look, doing this completely strips you of all your power. But on the other side, we have ultimate responsibility. That means owning the buy button, owning the stop loss, and completely owning the outcome. Taking ultimate responsibility is literally the only way you gain full control over your future. Because think about it, if it's your fault you lost, that means it's totally within your power to fix it.
Number 5. The 5 truths of trading. Let's move to and see how this builds up to the rapid-fire culmination of our entire explainer today.
All right, here are the 5 fundamental truths you absolutely must burn into your brain. 1. Anything can happen. 2. You do not need to know what will happen next to make money. 3. There's a random distribution of wins and losses on any given set of variables. 4. A strategy is simply an indication of a higher probability of one outcome over another. And 5. Every single moment in the market is utterly unique. You guys, true consistency does not come from finding a magical strategy. Consistency comes from deeply, truly internalizing these 5 beliefs.
So the crucial point is this. Your goal should not be to predict the market. Your goal should be to execute your strategy flawlessly, manage your risk, and let the probabilities play out. That right there is your true job description as a professional trader. Nothing more, nothing less.
So I'll leave you with this. Are you ready to stop predicting and start taking ultimate responsibility for your edge? It's time to empower yourself. Let go of the endless search for the Holy Grail, accept the math, and finally let the probabilities work in your favor. Thanks so much for joining me on this explainer, and I will catch you in the next one.